Hello friends, good morning to all of you, and this is the video related to the RBWM JAIIB, and it's related to the important retail liability products. So it's the chapter number 8 from the module B of the retail banking and the wealth management, right? So first of all, let's have a look at the topic related to opening of the current account. Now, current account, there is no limit related to the transactions, related to deposit transactions, related to the withdrawal transactions. And whenever the account is to be opened, like while opening the account, the bank can be accepting the cash, the bank can be accepting the check, like it could be related to the same bank or it could be related to some other bank. And for the check from another bank basically indicates that we want to transfer the funds from the existing banking relationship. And also the verification is to be done properly. We do require the KYC documents. We do require the firm registration documents, right? Those are also required. And the verification of these documents is also to be done. Like the proper due diligence is to be done. We say it to be the due diligence. Like when we are to check the documents, particularly, we are to check the validity of the documents. We are to positively establish the documents. We say it to be the due diligence, and it is mandatory. And it is mandatory to ensure that we are having no multiple banking misuse, and also no undisclosed credit exposure is there. That's why we basically do the disclosures about it, right? And also banks must be verifying like whatever the existing facilities which are going on. We are also to verify the credit facilities, like outstanding credit facilities which are already there, the exposure which is already there, or exposure across the banking system. That is very much required. Why it is required? Because there are RBI guidelines related to it. So if you want to open the current account, we have to look into the RBI guidelines. What are the RBI guidelines? So borrowers who are having the exposure lesser than 5 crore rupees, there is no restriction related to opening the current account. There is no restriction related to granting the CC or OD limits to it, right? But it is mandatory that the borrower must be informing the bank if the exposure is going beyond or basically reaching 5 crore rupees. Why it is required? Because in case if you are having the exposure with some bank, or the borrower exposure is greater than or equal to 5 crore. So let's say A is the borrower and A has already taken a bank loan of 6 crore rupees. Now the condition is satisfied. What condition is satisfied? That the exposure is above 5 crore rupees or equal to 5 crore rupees, equal to 5 crore rupees. The condition is satisfied. Now in that scenario, the current account rule says what? That bank having minimum 10% exposure in total banking system exposure. Only there you can be opening the current account. So in case if you're exceeding 5 crore or equal to 5 crore, in that scenario, you can be opening the current account only with that particular bank where you are having the exposure minimum of 10%, right? And also you can be having the CC and OD limit with that particular bank only. And if you are talking about the other banks, let's say where the exposure is up to 9%, up to 9%, right? In that scenario, when the exposure is up to 9%. So those lending banks can be opening the collecting accounts. So collection accounts can be opened, but not the current account. And also whatsoever the funds, those will be transferred to the collection accounts. That is to be transferred to the working capital account. That's a CC or OD account within 2 working days. That is required. So if I quote you an example, let's just have a look at an example so that you can understand it well. Let's just have a look at it. So let's say person A has taken a loan from different banks, XYZ Bank and the PQR Bank, and the total exposure is 6 crore, as I told you, right? Now the person A has taken 10 lakh of loan from the particular XYZ Bank and 5.9 crore of the loan from the PQR Bank, right? So the condition is satisfied, like the exposure is greater than or equal to 5 crore. So definitely the A can be opening the current account only with the banks where the minimum exposure is 10%. Now the minimum exposure, like the total exposure is 6 crore, the minimum exposure is like 60 lakh. Now, only in those banks where the exposure related to person A is 60 lakh or above, there only the person A can open the current account. And with the rest of the banks, like in the case of the XYZ bank, it can just be opening a collection account. It can just be opening a collection account, and whatsoever the amount that is transferred to this collection account, it is to be transferred to the working capital account, CC limit account or OD limit account within 2 working days. Clear with it? Clear with it so far? Okay. So that is a RBI guideline related to opening the current account so far. Right? Now, after that, it's about the monitoring of the newly opened accounts. It's important. Now, you should be strictly complying with the KYC guidelines. And the KYC guidelines for the banking are given under what section? Kindly do let me know because we have already covered it. Under what section the guidelines for the KYC AML are given? Those are given under the section 35A. Section 35A of the Banking Regulation Act. The guidelines are given for the banking system related to the KYC AML. And we should strictly be complying with the KYC AML guidelines. Like we should be monitoring the suspicious transactions. Let's say if there are any kind of the suspicious transactions, those are to be taken care of. If there are unusual credits, those are to be taken care of, right? And also the third party credits are allowed. Yes, those are allowed, but those must be genuineness. There must be genuineness of the transactions. Those must be genuine, and there must be the genuine of the transaction when we are talking about the third party credits, right? And further, what should be the credit of instruments? Like if you have received any of the checks, any of the draft, any of the refund orders, any of the account pay instruments, only those instruments which are in the pay name and the pay name is matching with the current account name, only those balances should be credited to the account. And it's the duty of the bank so as to provide the account holder with the statement of the account every month. So statement of the account is basically required to be given to the account holder every month without any extra charges. That is basically required. Then after that, it's related to transfer of the accounts. So it was the Damodaran committee recommended that particularly that the customer can retain the same account number, right? That the customer can basically be retaining the same account number when you're shifting accounts from one branch to another, when you're moving from one city to another. I'm talking about the same bank here. It's about the facility for the account number portability. Like if you're basically shifting from one city to another, or let's say you want to shift your account from one branch to another, in that scenario, you can be doing so. And that was basically recommended by the Damodaran committee. Then it is related to inoperative accounts. So inoperative accounts are basically those accounts where there are no transactions for the last 2 years. And how you can be reactivating these accounts? Let's say if you're having a inoperative account and there were no transactions for the last 2 years, how you can be reactivating such account? First of all, you should be obtaining the fresh KYC documents. Those are to be obtained, right? And those are to be verified. And the bank should be satisfied about the reasons of inactivity, that why the activity was not there, why the operations were not there. So after that, the account can be reactivated. After that, the accounts can be reactivated. And what do you mean by the dormant accounts? Now, you should be knowing the difference between the inoperative accounts And also, what are the dormant accounts? That's very much important. See, for the inoperative accounts, I've already told you that when there is no customer initiated transaction for the continuous period of 2 years, then those are said to be the inoperative accounts. Like interest if it is credited by the bank, service charges if debited by the bank, auto debits by the bank, those are not considered to be the transactions. Those are not considered to be the transactions, right? But when we're talking about the dormant account, it's the another state. Like dormant account is an inoperative account, but with operational restrictions. So dormant is what? Dormant is just like it's an inoperative account. So we say if it's an inoperative account, plus if the bank has restricted the account, if the bank has imposed the restrictions upon it, then we say it to be the dormant account. So customer is cannot be freely operating the account without reactivation such account. That is said to be the dormant account. Getting it? Is that clear? Now, after that topic, it's about the closure of the current account. What are the process requirements, first of all? So it could be the reason, and bank should be ascertaining the specific reason that what is a specific reason that the customer wants to close the account. And further, the bank definitely tries so as to retain the account, so as to continue the account if it is possible, right? Definitely the bank will be asking first of all reason, what's the reason for closing the account, and the bank will be trying its best so as to retain the account. And what documentation is basically required? You do require a written letter from the customer. Written letter from the customer is basically required. Request letter is required, and it should be signed by all the account holders or partners. Then only the account can be closed. Then only the account can be closed. Clear? And no interest is paid in case of the current account. I have already told you this is a very basic thing, right? That in case of the current account, no interest is paid. No interest is paid to the customer. After that, it's about the saving bank accounts. It is about the saving bank accounts. Saving bank account is a general account, like you do open it for the saving purposes. And further, like it is for the individuals, for the households, and in some cases, it's also allowed to the trusts, right? And some NGOs, it's also allowed. So you can be earning interest upon it. And it is basically there so as to encourage the saving habit. So as to encourage the saving habits, and definitely it provides you with the interest income. You can earn interest upon it, upon the deposit amount. At the same time, you'll be having the liquidity. At the same time, you'll be having the liquidity because it's a demand deposit. Both the saving deposit and the current deposit are the demand deposit, that whenever you do require the money, you can be having the money, you can be withdrawing it from the bank, right? So what are the advantages? First of all, it encourages the saving habit. It inculcates the saving habit among the customers, right? And definitely you can be earning the interest income upon it. And also you can be depositing the check payments toward it. And also you can make the payments by way of issuing the checks. That's also possible. And it acts as a proof of income. Let's say if you're a salaried person, then you can be showing your statement, and it basically acts as a proof of income. And also it can be acting as a passbook. The saving account passbook can act as a identity proof and the residential proof for the account holder. And you are also allowed the electronic transactions. You can be participating in NEFT, you can be participating in RTGS, you can be participating in UPI or online transactions through the saving fund account. That's an internet banking facility, and online banking are available, mobile banking are available. Now, what are the advantages and importance to the bank? What is the advantage to the bank? So, saving account balance is a part of CASA. CASA is basically considered to be said to be current account saving account balances. Why this is important to bank? Why the bank is always after the CASA? Why the bank want to mobilize the CASA? See, because it's a low cost deposit which will be available to the bank. It will be a low cost deposit. Why low cost? Because if you compare like saving account interest with the fixed deposit interest, it's quite low. The saving account interest that the bank pays is quite low. Let's say the bank is paying 3.5% on the saving account balance, but let's say 7% on the FDR or recurring deposits. So in case the bank is having much more portion related to the CASA, the net interest income will be higher or the net interest margin will be higher. So it improves the CASA in a way, improves what? It improves the net interest margin. So we can simply be saying it's a low cost deposit that will be available and it's going to improve the interest spread and the margin. In a way, we can say it is going to improve the net interest margin, that is NIM. And also it's going to provide you with the strong retail deposit base. So the cross selling is possible. You can be marketing the other products. Marketing the other product means you can be doing the cross selling. So if you're having the saving deposit accounts with you, right, it means you are having the customers who are associated with you. And when you having the customers associated with you, you can be selling the products to them. Cross selling can be done, right? So that's the case. Play with it, and that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.